Good morning friends. In our previous video, we discussed all the aspects related to deduction of TDS on payment of rent under section 194I. Continuing with our series on TDS tutorials, today I will discuss another important section, section 194IA, TDS on purchase of immovable property. What's unique about this section of TDS is, this is the only section where the time limit for payment of TDS is within 30 days from the date of deduction, and the challan is accompanied with a return statement in Form 26QB, unlike others where the TDS return has to be filed quarterly but payment has to be made by 7th of the next month from the date of deduction. So first let's have a direct look at what does the section says. Subsection 1 of section 194IA states that any person being a transferee responsible for paying to a resident hereinafter referred to as transferor any sum by way of consideration for transfer of any immovable property other than agricultural land shall at the time of credit of such sum to the account of the transferor or at the time of payment of such sum in cash or by issue of a cheque or draft or by any other mode, whichever is earlier, deduct an amount equal to 1% of such sum as income tax thereon. So before moving further into the topic, let me explain some key takeaways from this subsection of section 194IA. At the time of credit of such sum to the account of transferor implies that once the entry of purchase is made in the books of accounts and the transferor is credited, TDS have to be deducted irrespective of whether the payment is made or not. It is then mentioned or at the time of payment, whichever is earlier, which implies that even if advance payment is made to the transferor irrespective of whether the sale deed is executed or not, or any sort of agreement has been entered into or not. I repeat, even if advance payment is made to the transferor irrespective of whether the sale deed is executed or not, or any sort of agreement has been entered into or not, TDS have to be deducted on each such advance payment if the amount shall cross the specified threshold limit on final payment. It's also evident that such immovable property should not be an agricultural land which has been specifically exempt by excluding the same from the definition. Then comes the rate of TDS, which shall be 1% irrespective of the legal status of the transferor, and at last the transferor should be a resident of India as defined in the provisions of the Act. Now let's analyze the threshold limit prescribed by section 194IA for TDS deduction. Subsection 2 of section 194IA talks about the threshold limit. It says that no deduction under subsection 1, which we discussed, no deduction under subsection 1 shall be made where the consideration for the transfer of an immovable property is less than 50 lakh rupees. So it is evident from this subsection that the value of the property should be rupees 50 lakhs or more. One also needs to be careful while reading the explanations to section 194IA, where three things have been specifically defined for more clarity. Definition of agricultural land, meaning of consideration for transfer of any immovable property, and immovable property itself. So let's have a look at these definitions before moving on to answering some possible frequently asked questions related to this section for better clarity and understanding. First comes the definition of agricultural land. Agricultural land means any land situated in India not being a land situated within the jurisdiction of a municipality or a cantonment board and which has a population of not less than 10,000 according to the last preceding census which has been published, or in any area within the distance of not more than 8 kilometers. I repeat, in any area within the distance of not more than 8 kilometers from the local municipality or cantonment board. Next comes the understanding of the consideration for transfer, which not only means the purchase value of the property but shall also include charges paid in the nature of club membership fees, car parking fees, electricity or water fees, maintenance fees, etc., which are incidental to such transfer of property. Last comes the definition of immovable property, which includes land except agricultural land as discussed earlier, or any building or part of the building. Now let's further move into a kind of deeper analysis of the section through frequently asked questions, which will give a clear insight on various aspects of the TDS deduction on purchase of immovable property. So the first question, the first and important and obvious query that would have come up in your mind must be whether TAN has to be obtained for TDS deduction under this section, as usually an individual buys property in his or her personal capacity and does not possess TAN. So the answer to this is no, TAN is not mandatory to be obtained. However, the buyer should hold a valid PAN in his or her name. The second important question, what if the property is jointly held by the two persons? Is TDS applicable? So the answer to this is, earlier when section 194IA was introduced, it was interpreted that the value of the immovable property is an important factor, and if it exceeds rupees 50 lakhs, TDS shall be applicable irrespective of the number of owners or the buyers. However, post the judgment passed on 6th May 2019 by the Tribunal Bench of Jodhpur in the case of Oxika Enterprises Private Limited versus Deputy Commissioner of Income Tax, where it was held that no, TDS is to be deducted on a jointly owned property if individual share is below rupees 50 lakhs. The provisions of the section are now being interpreted accordingly. I repeat, post the judgment passed by the Tribunal Bench of Jodhpur in the case of Oxika Enterprises Private Limited, it was held that no TDS is to be deducted on a jointly owned property if individual share is below rupees 50 lakhs. The provisions of this section are now being interpreted according to the judgment. However, in our view, although the decision was given by the ITAT bench of Jodhpur, for other tax jurisdictions, such decisions have to be taken on the case-to-case basis. The third important question, what if the property is owned by single person but is being purchased jointly? I repeat, what if the property is owned by a single person but is being purchased jointly? The answer to this is, based on the judgment I mentioned earlier, the answer remains the same, as two separate individuals shall be making the payment from their separate bank accounts. And if the amount of individual share does not exceed the threshold limit of rupees 50 lakhs, no TDS have to be deducted. I repeat, if the amount of individual share does not exceed the threshold limit of rupees 50 lakhs in case of joint buyers, no TDS has to be deducted. Coming to the fourth question, what if the property is being purchased from a non-resident, that is, transferor is a non-resident? The answer to this is, section 194IA does not apply in case of purchase of immovable property from a non-resident transferor. In such a case, TDS have to be deducted as per the provisions of section 195, which prescribe the rates of TDS to be deducted from non-residents while making payment of different natures. Needless to mention, surcharge and cess shall be applicable on the rates so prescribed where the transferor is a non-resident. Coming to the fifth question, what are the details required for filing Form 26UB? So the answer to this is, the following details should be kept handy while filing Form 26QB. PAN of the buyer as well as the seller, complete address of the location at which the property is situated, date of the sale agreement, amount of consideration, date of payment in case advance is paid. So the sixth question, in case of more than one buyer or seller, can a single form be filed since the property is the same? No. Separate forms have to be filed for each unique buyer-seller combination. I repeat, separate forms have to be filed for each unique buyer-seller combination. So in case of 2 sellers and 1 buyer, 2 Form 26QB has to be filed. Similarly, in case of 2 sellers and 2 buyers, 4 Form 26QB has to be filed. I repeat, in case of 2 sellers and 1 buyer, 2 Form 26QB has to be filed, and in case of 2 sellers and 2 buyers, 4 Form 26QB has to be filed. The 7th question which should have come in your mind: what if the PAN is not available with the seller? Answer to this is, it is mandatory for both buyer and seller to have a valid PAN. In case PAN is not available, TDS have to be deducted as per the provisions laid down in section 206A, which can be as high as 20% of the consideration amount. The 8th question: whether any interest or penalty is applicable for non-filing of Form 26QB? Yes. The interest and penalty as applicable to other sections of TDS and Forms 24Q and 26Q is also applicable to Section 194IA and Form 26QB. So let's summarize our discussion on deduction of TDS under Section 194IA by revisiting key points you need to remember. TDS have to be deducted on purchase of immovable property from a resident except agricultural land. TDS have to be deducted at the rate of 1% if the consideration amount is rupees 50 lakhs or more. In case of more than one buyer or seller, the individual share has to be considered for calculation of rupees 50 lakhs. The time limit for deposit of TDS is within 30 days from the date of deduction, and the return statement in Form 26QB has to be filed along with the challan. The section is applicable only in case of resident transferor. Last but very important of all, don't forget to take the PAN of the transferor and other details as required at the time of filing Form 26QB. I hope deduction of TDS under Section 194IA shall now be a bit easier for you. For any queries, feel free to contact us or comment below. Thank you.